Hello everyone, I hope everyone's doing good. Today's Friday, so I hope you guys enjoy your weekend, and have a good weekend with you guys as family and friends. So today I wanted to talk about a topic that a lot of people don't enjoy talking about. One, because they don't like it, and number two, because they don't understand it, to be honest. And number three, because of the effects or what they have to do because of it, right? And guess what that is? That's taxes, right? Nobody likes taxes, nobody likes talking about taxes, but at the end of the day, you have to pay your taxes if you're making money, if you're a business, if you're an investor, or even if you're a sole proprietor or just an individual, you have to pay taxes, right? So it's so important to be proactive about your taxes that I can't stress it enough, right? As an entrepreneur myself, when I started my business, I was told by other people, make sure you get your taxes right, make sure you hire a bookkeeper, make sure you get a good tax accountant, make sure you do, this and that, anything regarding tax, just make sure that you're proactive about it, right? And I said, yeah, for sure. And I just put it in the back burner. And as an entrepreneur, you're always in attack mode, right? So same thing happened with me. I was in attack mode for the first 2-3 years of my life. Yeah, I filed my taxes and everything, but I never really, understood what I was doing. My corporate structure wasn't good. My entities weren't, correctly filed, and all of that. I was all about just attack mode. But in investing and in business, it's kind of a cliche to say right now, but it's the truth. It does matter of how much you make, right? Totally, right? But at the end of the day, it's even more important how much you keep, right? If you made, let's say, 100,000 or 500,000 or $2 million, that if you own a business, right? At the end of the year, you grossed, but you didn't keep much. What's the point, right? And the way that you get to keep more and take more home for your family and yourself and your future plans in your business is by having the right tax accountant and the right tax planning and the right tax entity structures, your corporate structures, right? And all that ties in together. It plays a big role of how much you're going to keep at the end of the year. So for me, the first year, I just went attack mode, and then at the end of the year, I realized I didn't do any bookkeeping. I was all about flipping homes, and I basically had this many receipts, but nothing was accounted for at all, right? And so I gave all the receipts to my accountant, and a lot of them were missing, and basically I hired like a cheap accountant that would just get it done, and I would move on, right? I just didn't want to deal with it, right? Of course, that was not a good idea. I do not recommend that, right? And then the second year, I said, okay, I need to go find a good accountant, like someone that's really gonna, give me good advice and that knows what they're talking about. So I did, right? But I didn't like their work ethic, and I didn't like the way that, their communication was and everything like that. And another thing for me, because I'm a Canadian, investing in the U.S., not only do I need a tax accountant that knows a lot of about the U.S. taxes, I also need someone that knows a lot about the Canadian taxes because I'm a Canadian, right? And then that same person needs to know how to make them mesh together, so at the end of the year I can keep more, right? So I finally found a good accountant, a very expensive accountant, that was referred to me by another friend of mine that does the same business, right? In real estate. He's from Canada, from Ontario, from Brampton, and now he's investing in the U.S. and that's the accountant that he's used for the first few years of his business. And he just said good things about him, so now I'm using him. So I think it's going to be okay this year. But it's so important, and now I am looking back and I'm regretting the time of me being, basically cheap about hiring my accountant, and he's the person that's going to help me take more home at the end of the year, right? The structure of your entities is so important when you're investing or you're doing any sort of business, right? Whatever type of business you have, there's a special type of entity just for you, right? Or some sort of a structure that's going to work just for your business, right? And you need to make sure that your accountant knows what best structure is for you, right? Or what's the best structure for you, right? Number 2 is tax planning, right? The worst thing is, you make all this money at the end of the year, throughout the year, and at the end of the year you have this big of a bill to pay, and you're like, oh my God, I didn't even expect that, and they want you to pay it like right away, otherwise this or that, right? CRA or IRS, either way, right? Uncle Sam. But tax planning will help you kind of anticipate what your tax bill is going to be at the end of the year. And if you have a good accountant and you have a good corporate structure, and you do good tax planning, you may even end up paying nothing. But the only way to get to that is by having a good accountant that knows what he's doing. It is so crucial, right? I know so many people, so many of my friends, so many just investors in general, when we sit down for coffee, they tell me that they own their properties under their own name, their personal name. They own the property personally. That's the worst thing to do. That is the worst thing to do. You should not own any property, any real estate, especially not an investment. I don't think you should own even your personal property, the home that you live in, under your own name. But at least your first investment property should not own under your under your name personally. You should have it as an entity, so it separates it from your personal assets. So, by the way, disclaimer: I'm not your tax accountant, so whatever information I give is just from personal experience, and you should go and get your own tax advice and legal advice. But yeah, so it's really important to have a good accountant on your team, right? And go through one, go through two, interview one, interview two, go speak to a few of his references, right, that he can provide, that do a similar business to yours, and see what their experience has been working with him, and see how long they've been working with the same accountant. It'll tell you a lot about their work ethic. It'll tell you a lot about their knowledge, right? And it'll tell you a lot about how much they can help you grow. Because at the end of the day, you need to give them your vision, and they need to see your vision, and then they're gonna guide you the right way to achieve your vision, right? So a tax accountant is a key player in your business, and you shouldn't take it lightly, right? The first 3 years of my career, I was just basically winging it, and but now that I'm starting to scale, I see that it just can't work anymore. I need somebody more experienced. I need somebody that has in-house bookkeeping, and that can really help me achieve my vision, right? So this video is not gonna be too much fun to listen to, but I really encourage that you go sit down. If you're thinking of buying a property, or you already own some real estate, or even a business, I really encourage you to go sit down with your accountant and ask him the tough questions. Do your own research and ask him the tough questions, and have him answer those questions, and then ask him about tell him about your future plans, and then have him tell you what should be done for you to achieve your goals, right? Because it could be a big roadblock if you don't know, right? If you don't have a plan. There should be a 1-year plan. There should be a 3-year plan, right? And you need to make sure that you have the best entity structure, the corporate structure, for you to make the most amount of money and also keep the most amount of money at the end of the year. So a lot of things fall under a tax conversation. So that video would go an hour long if I were to just keep talking about it. But I do recommend that you guys go speak to your tax accountant and ask the tough questions, do your own research, and see what he has to say about it. A lot of people a lot of tax accountants, they're winging it too, but if you really want to grow, you need an expert. You need somebody that really has a lot of experience and has helped someone like you get to where you want to go. And if he has a few clients like that where they started small and they're now big and they're still with the same accountant, it'll tell you a lot about his knowledge and his capabilities. So that's it for today, guys. Hope you guys enjoy your Friday, and think about your taxes and try to keep as much as you can at the end of the year. That's basically what my advice is. And all right, guys, that's all for now. Take care. Peace out. Good luck. Bye-bye.